and welcome back to the Mind and Money podcast. I'm Sherry, a financial coach.
I'm Val, a financial planner, and today we are talking about something that is going to be coming up for, as Sherry said, I think the quote is around 60% of Canadians in the next 12 to 18 months, and we're in that area right now, that are coming up with mortgage renewals. A lot of them, I don't know the percentage, are coming from like a really nice locked in rate. Some have rode the variable wave and are here to see the other side. Bless, amazing, proud of you. Sherry has recently gone through a mortgage renewal. I have been walking clients through mortgage renewals with mortgage brokers, with their banks. So that's what we're going to talk about today, because there's a lot of misconception around, oh my gosh, my rate's at 1.9% or 2%, and now going rates are say at 4% or whatever it may be, my payment's going to double. So Sherry, let's talk about the process you went through. And that I found interesting about your renewal process is that you had multiple different rates from one institution.
Yeah, it was such a clusterfuck and it just really helped me see how people that are less, maybe not financially savvy, but people that are less comfortable advocating for themselves and really going down the rabbit hole of discovering what their options are would be really fucked. So we renewed in May.
And let's be clear, like this was a straight renewal. You didn't wrap more debt into it.
Yep.
You did not change the amortization. To say what that word means, amortization is how long is the debt stretched out over. Typical mortgages are 25. You can now see 30-year mortgages. So you did not mess with anything other than, hey, you now need to re-up your terms. We are going to have a new rate.
Yep.
And a new payment.
RIP to our 1.5%.
Beautiful thing. And you also reached out to, like, you're with a bank.
Yep.
But you did reach out to a broker. I am a big fan of the broker world, and or just having an expert that's truly looking out for your interest.
Yep.
Often I shouldn't say that. Not always though does a mortgage expert reach out to you from the bank.
Yeah. And the problem can be sometimes that it's not the same person that you saw 2 years ago, 5 years ago.
90% of the time it's not the same person.
We're really fortunate in that for the longest time, actually through the duration of our mortgage on our primary residence, we had somebody that I've known from my childhood who filled that need for us, who I really trusted. I know she had my best interests at heart. She actually worked for the mortgage broker that we got our very first mortgage with. And I remember sitting down with her. She was like the admin person and then later became a mortgage specialist with a bank. She sat down with us and said, don't get life insurance on your mortgage, get separate term life insurance. And at that time, I was just like, okay, we'll do that. Thank you. And now reflective, I'm like, oh my God, that was such impactful advice. And having her support us through decades of being mortgage holders, now that she's stepped into a new role and we don't have her there, it's just like,
consistency is huge. Someone that knows you, someone that you trust, someone that listens to your story to understand the full picture.
And she was she helped us with the mortgage for the cottage too. And bless her heart, she earned her money because it was a stressful process to go through because it was in early 2021. The market was fucking hot. There were so many offers for each property and we made offers on several. And every time I made an offer, we wanted to go in and be as like an attractive offer as possible. And I'd be like on the phone with them, like, what do you think? Like, do you think, can we go in? No conditions? Like we're already pre-approved. And she
truly just helped with guidance.
I missed her.
Right?
So this time I'm like, we don't have her available to us for this anymore. She sent me the name of somebody who could help me with it. And I emailed back and forth. I'm just like, I don't know this person. There's people that I'm connected with on social media that are mortgage brokers. And I feel like there's people out there that can support us. So I reached out to one of them and really appreciate her honesty. We actually had a meeting and my intention was I want to have her help me. And she was very honest and said, listen, I can't offer the rates that your current mortgage holder can offer you because they have essentially no overhead to go through a renewal with you because they're not going to do a credit check.
You don't need an appraisal.
There's not all this paperwork they have to do.
Yes.
And she's like, I would have to do that to do this. So then because of that, I can't offer you the same rates that the bank can. I'm just like, I really don't want to go with the bank. But ultimately, we did go with the bank. But the range of rates just, it pisses me off because emailing with the mortgage specialist from the bank, the interest rate offer that he gave us was, I can't remember exactly, but it was like low 4%. So like 4.07 or something like that. But there was an offer online. Like when I went to my banking app online, it said like, click here to renew online. I'm like, I'm not going to click that because that's going to be stupid. That's not going to be my best offer. Working with a human makes the most sense. So then I messaged the mortgage specialist again and said, I see this offer online. So the offer that I got online when I went through and started it just to see what the offer was less. It was like 3.97, 3.96. And then I messaged him like, I see this offer online. What the fuck? And he's like, yeah, you should just go with that one because it makes the most sense because typically they're able to offer more than I can. I'm like, what in the bejesus? In what world does this make sense? And I guess it's just lower lift for them. So ultimately we did renew online. And then it's just there's so many broken steps because then they continue to email about, hey, you got to renew, it's like we went through this, both my husband and I, because we're joint on the mortgage, had to go through it, the online, and said like, check, yes, we want to do this. But then after we had done that, we also each got a letter in the mail, which drives me crazy. I understand that, maybe there's people that jointly own a house that need to get separate offers and separate statements, but just like, we're in the same address, just send us one with both of our names on it.
Right.
Because they're both identical. But the rates in that letter, there was no 3 point anything on there. They were, I think, as high as 7%, 7.5%. I think I shredded the letter or I would look it up. So if I'm not tech savvy and I don't have the app and I'm not like, I don't think that, I should call and talk to a human at the bank. I just think, yep, my mortgage is up for renewal. They've sent me this letter. So these must be the best offers that they have. Which shitty offer am I going to pick?
You also weren't fighting for your lowest rate. A lot of the times people will talk to the bank and say, what's your best offer? Then they'll go get a mortgage broker and the mortgage broker can beat that. Then they'll go back to the bank. The bank will say, oh yeah, we can match that. So they don't give you your best offer right away, but they also gave you 3 different avenues of rates and none of them were the same.
Yeah, it was just very frustrating. And for some people that don't have that confidence, it just would be so overwhelming. I imagine like, but it says I could do this here and this here and 3-year, 5-year, 1 year. There's a lot of uncertainty right now with where rates are going to go.
But then having as the bank or the lender that's sending these things out, that would be very frustrating to be that mortgage expert or that advisor that is then being like, oh yeah, I don't know what our best deal is because it's coming from 3 different ways. And I can tell you maybe you should go fixed or variable. I can give you guidance for your situation, but how do I get the best rate? Oh, you just go online and do that. So I saw this too with a different institution. A client was up for renewal. He wanted to combine his other debts with that same institution into one mortgage. And they're like, oh no, like it was a credit card at 20%. They're like, no, we don't combine those in. And he had a vehicle loan with a different bank. And they said, oh no, we don't touch vehicle loans from a different bank, which its rate was double what the mortgage would be. And I said, this makes no sense. This makes no sense. Why would they not wrap this all together? So referred him to a broker.
Yeah, honestly, if you're changing anything about your mortgage, go to a broker. A broker can give you more options. They're going to take more time to support you. And also through the renewal and the communication with the person at the bank, also one of the emails is, oh yeah, I got a new job. I do this now. But if you're not changing anything with your mortgage, I can still help you. I'm just like, what kind of disaster?
Right.
And I really didn't appreciate the situation that we had before for so many years. And I wanted to recreate that with a broker, but, and she was honest. I appreciate her honesty. And
That's very true.
In so many situations, she had gone through all of the work, done all the steps to get the pre-approval that someone's going to be able to move and do the renewal through her. And then the bank's like, snap, we'll take 0.5% off that rate. And then you go with the bank because it's in your best financial interest. So
yeah, they were doing a lot of that.
She says they're getting like the banks
very
are really
undermining, like
yeah.
Yes, which is a lot of work for that broker. So it's this, and also not in every situation is rate the most important thing. Sometimes it's term, sometimes it's flexibility, which comes in line with term, the lender's specifications. So there's something called with different credit unions, and this is more into the weeds, and a mortgage expert would let me know, or credit union employee would let me know if these are still a thing, but I have a client with one. It's a bona fide sales clause. So he got a really good rate on his mortgage, but he cannot break that mortgage unless he dies or sells his house.
Whoa.
So it's like just in there, part of the piece. There's different court cases about it, but it's in there. So not always is rate most important. You definitely want to be mindful of that. But I have a client where went through a separation, needed to get that next house, did a private mortgage, which specific cases it works for. And yeah, the rate was like 10% for 12 months. Sucks, but it got him into a house, his kids' stability. It worked.
And in some situations, you are a high risk to the lender. So you're going to have to go with the lenders that are more open to those risks.
Mhm.
And then it's a great thing too, is when you're working with a mortgage broker, they can help coach you to say, okay, because we're at this high rate, if we go with a shorter period,
Mhm.
then we can do these things. If you do this, this, and this, you'll be a much more attractive the lenders in 12 months time or
Yes.
in 18 months time.
They can
And
coach
then
you.
can have options for more rates. But the big consideration is that we're all looking at how much is my payment going to increase and what flexibility do you have over adjusting that payment. So just full transparency, I will lay my cards out on the table. And our mortgage, I think the balance remaining when we renewed was about the 260 range. And our payment when we were at 1.5% before we renewed was 620 ish biweekly.
Okay.
And then when we renewed at just under 4%, we are now at 740 biweekly.
So $250 a month. Yeah.
So it's
$250 a month difference.
When you look at it, it's not super significant, but if you double the amount of the mortgage,
well,
it's like, the percentage increase is really impactful on the monthly payments. We kept the terms the same. We didn't extend to amortize it over a longer period of time. But
right, because if you had done that, you probably could have, you very likely could have kept the same payment, would have paid more in interest.
Yeah, over a longer period of time.
If you didn't have the flexibility or the ability to pay more.
If you're coming up, if you're one of those 60% of Canadian mortgage holders that's got an imminent renewal coming up on the horizon, and also fun fact, if you get a mortgage in the US, you just pay the rate for the whole time unless you change something. Wouldn't that be lovely to just know what your mortgage payment was going to be for the duration of your mortgage? But
sorry, Canadians, we don't get that.
We get so many other things.
If you, like, before you're talking to a mortgage broker that you trust, that you know has done good things, and if it's something like Sherry's, definitely still talk to your bank. Do your homework on this. It's going to save you. But go online if you're freaking out. Take what your mortgage balance is or is going to be at renewal. Just type in mortgage payment calculator. There's a whole bunch there. Put in the rate, put in how long you want to pay it off. And if you want to stick with the 18 years, leave that on there and it will calculate your mortgage payment. Use a rate that, like right now for clients, unless it's a specific situation, I put in like 4.5%. And then it's always going to be like a pleasant surprise that, oh, we got a lower rate because this lender gave us 3.9 or 4.2.
Yeah. Really look at your numbers to know what can we reasonably absorb as far as an increased mortgage payment and what other things can we do? One of the things that I've seen over and over again with clients when they start working with me is we've been in our mortgage or we've been in our home for 10 years. Our home's worth $400,000 and we have a $380,000 mortgage. I'm like, how the fuck is that possible? And I see on repeat we renew, we roll debt in. We accumulate more debt, we renew, we roll debt in. And it's very common. But I really want to encourage you, if you are rolling debt into your mortgage and you're going to take it and extend it out over 25 years again to keep the payment manageable, having those strategies so that you're not accumulating that debt. And even if some of those strategies are canceling some credit cards so that you don't have a whole lot of access to debt, and really looking at how did that debt accumulate? Was it slowly over time? Was it, holy shit, we have to replace a roof, so we put $20,000 a credit card. So, and then coming up with adjustments to how you're managing your money so that those don't come and bite you in the ass.
A lot of the times the refinance is like a fresh slate, feels clean, things are paid off. We have one debt payment or biweekly, whatever it is, but just our mortgage to pay for. But with that, we have to have habit change and awareness. So we don't end up in the same place 5 years later. And one thing that we talk about too with clients is looking at what is what do we know about in the next 5 years? Do we know a vehicle is going to crap out? Yes. Do we have the funds to save for it? Yes. No. Should we take some out and then have that so we don't finance at 6 or 8% for a new vehicle, used vehicle, whatever? So looking at the full picture, and there's definitely a lot of the refinance repetition of like, we're here again, we're maxed out, we roll it in. We're here again, we're maxed out, we roll it in. Depending on the value of your house, yes, that can go on for some time, but at some point we want to make progress in a different direction. It's utilizing it when it works for us, but having the habit change come along with it. So we're not in the same position every renewal.
Yeah. And it's about having ways so that, like, my golden financial rule, you are not spending more than you make, because that at the heart of it is where debt accumulates, and being able to know that you have to have clarity of what's coming in and what's going out month over month, and building in strategies like saving for larger expenses like holidays and gifting and vacations and travel for little bits over time. Using automation can really help to mitigate when some of those bigger expenses comes in. But it's all about that clarity and understanding what is coming in every month and what is going out, and does it balance, or are we overspending? Because if you're not looking and you're in avoidance mode, you don't have that information, and it can really creep up on you and then come and be a big old slap in the face when you're like, okay, I'm ready to look at things, and oh shit, we've accumulated $5,000 of debt since we refinanced 6 months ago. So having that clarity and looking now, if you've got a mortgage renewal coming up in, 3 months, 4 months, 6 months, what is coming in, what is going out? Is there wiggle room? And if there's not, what can we do to reduce those payments, optimize our expenses to create wiggle room? Or we're just
Or
like,
to just have like hard zeros. Like if it's cash, it's cash. If it's coming from a separate account that will go to zero, you got to have that hard zero for yourself.
and I love expenses, things set up by accounts. I know having the number of accounts that I have is overwhelming to some people, but having like, from a household perspective, having things to cover your needs in two separate accounts. One is like, these are the bills, and this is the household's
Yeah, like
spending.
fuel, groceries. Yes. So if nothing changes, nothing changes. When your mortgage renews, look at your options. Do not panic if your rate doubles, which yours didn't quite, but close to it.
Oh yeah, it more than
Right.
doubled.
Okay, perfect. Use the mortgage calculator and or ask your mortgage broker to run a projection of what
Yep.
it will look like. Share your full picture. I just had a refinance with the mortgage broker, and the client told me this, but she didn't tell the mortgage broker. She's like, oh yeah, I have this private loan I have to pay off too. I'm like, okay, what's the interest rate? When do we want to get that paid off? It was really high interest. So I was like, okay, we need to wrap that into the mortgage because this makes the most sense.
And even if you're doing something like that, so if you're if you're renewing your mortgage and you're able to cover the payment at the increased rate, and you're able to cover the loan personal payment, and you want to roll it in to reduce the rate, but you still want to pay the same amount, you can do that as well. Say,
Yes.
I'm paying $3,000 for my mortgage and I'm paying $500 for this private loan payment, and I want to roll it in, but I still want to pay $3,500 every month to my mortgage to pay it off faster. And also, fun fact, if you are changing things about your mortgage and the payment frequency is throwing you off monthly, having a mortgage payment monthly when you're paid weekly or biweekly can feel really overwhelming, or having a biweekly mortgage payment when you are paid on the 1st and 15th of the month can really throw you for a loop. So really think about lining up your mortgage frequency with your pay schedule. If you get paid weekly, pay your mortgage weekly, because then you know it's taken care of every week and you don't have to save up a little bit out of each pay if you're paying monthly. If you're paying weekly or biweekly, there's options where you can pay weekly or biweekly accelerated. So in the biweekly portion of it, what they do is they take your monthly payment, if you were paying monthly, divide it in half, and then you're essentially paying one additional mortgage payment every year. So if you were paying annually, monthly, you would be paying 13 mortgage payments because you're paying 2 months of the year, you're paying 3 mortgage payments. So it gets you ahead a little bit, and it shortens how long you'll pay for your mortgage. So just our example is our mortgage was for 25 years amortization, and we had a 4-year mortgage. So then in theory, we should have had 21 years left when we, and we had 18
Because
and
you made
change
extra
because
payments.
we made the biweekly accelerated payment
Yes.
schedule. And I think we may have paid like a couple extra $100 one time, but we weren't regularly making extra payments. So it can be really impactful without a whole lot of discomfort when you line it up with your pay schedule.
So going into a client situation too, where they had a lot of debts and were getting maxed out on things, we refinanced, and the mortgage broker, what they found or saved is like how it's advertised a lot, is $1,200 a month. So yes, that's freed up in cash flow because it's not going towards the line of credit and the credit cards. Yes, we got into this trouble because we were having issues with cash flow. Some of that can go towards the mortgage, but we have to keep some in-house because we're finding life for them to need more money to pay for things. So it's striking that balance between the two, but knowing your numbers. It starts with looking at your numbers. What goes in, what comes out. It's not just being like, oh, sweet, we found $1,200, because you will not feel like you found $1,200 when you refinance in 6 months. If we have it, it will go. We will not pay attention to it.
Yeah, if you don't do something intentional with it and you just go and renew and roll those debts in and reduce your overall monthly payments, even though there's a $1,200 reduction in your overall monthly payments, 3, 4, 5 years from now, when you renew again, you could be in the same boat where you've got those debts accumulated because you didn't make changes to your money. Before I got fired, we spent money with no intentions, and it was to escape from life and do things that we wanted to do without much thought. And that pivot to intentional spending really is a game changer. And I know it's very like, okay, Sherry, spend intentionally, but how? And a lot of that does come from having those systems to know, okay, this money is for our bills. We need $3,500 a month in our bills account, and we can't touch that. And that's, if we touch it, it's going to be a house of cards. It's all going to fall down if we use it to buy groceries. And this money is our groceries and gas, and there's $100 left in there, and we don't get paid for 3 days, but we can only spend this $100 because if we take money from our bills account, we're hooped. So just,
and that's a conversation for a different time, but like you and your partner or whomever you're sharing this with have to be on the same page. If one manages it more, that's fine, but you can't have someone that's like, cool, I'm going to go blow whatever's in that account on whatever I want. And then you're like, oh, but we need groceries and there's no money there. So keeping separate finances, also nothing wrong with that. Like it all, again, I'm sure we have an episode somewhere on here about how we can run couple finances, but has to work for your situation. So mortgages, talk to an expert, go see your options. No, doubling your interest rate does not double your payment.
And know that even a small increase in your interest rate could increase your payment more than you anticipate. Go and if you're just like, shit, I don't want to know, knowing is better. Knowing gives you the power to make changes and start to build plans. Because if you're a month out from your mortgage renewal and you haven't done anything and you don't know what the payment is going to be, and then you get this letter in the mail that I got from our bank that said, like, here are your options, I would have panicked because I'm like,
did you do the math on what the difference would be? Like, had you chosen whatever their 5-year rate was, did you lock in for 5 years, I assume?
No, we did 3.
3, okay. And I guess you got rid of the paper, but it'd be interesting to see what that dollar amount was.
It was
wasn't it a full percent more?
No, it was more than that. Like we were under 4, and some of them were like up to 7.5%.
For the 3-year though?
I don't know if it's for the 3-year because there were so many options there too, which is another thing that could have been overwhelming. You just get this letter in the mail and there's options of varying interest rates and varying payment amounts. It's just like, what makes the most sense? And it's you don't know. You're not the expert. It's not your job to know the best answers. It's your job to bring in a team of people or bring in people that you trust to understand what your options are. So
talk to your trusted team.
Yeah. Take the blinders off. Go look at your numbers and start, even if you're a year out, just start to prepare to see if your mortgage payment is going to go up by $500 a month. Live like that now. Put $500 extra towards savings or towards debt, or live like that for a little bit and just see how it feels and if it's manageable. Because if it is manageable and you're able to do it and not extend the length of your mortgage, renewal is easier, but also you get to have your mortgage paid off sooner, which is lovely and might seem like a pipe dream if you're still early in your mortgage, but definitely you can get there with that focus and understanding and having intention with how you spend your money.
You nailed it.
So we are happy you've been here, and we wish you all the luck, but also take action if you've got mortgage renewal coming up, because you'll get through it. It'll be okay. And then you'll just have to do it 3 to 5 more times if you're early in your mortgage life. So good luck with your mortgage renewal, and feel free to shoot us a DM if you've got any questions. And if you're in Ontario, I'm not sure the mortgage brokers that I have that I trust where they're located and where they can help. But if you're looking for a mortgage broker and you want somebody to help walk with
Canada.
Yeah. Shoot us a DM and we can help point you in the right directions. We're glad you've been here, and we can't wait to see you next time.